Almost 4 months ago, at the end of November, I posted this video on Apple and my prediction of why we were headed to all-time highs. Price was around $116 at the time, and I predicted that we were going to come up towards this $148 to $152 target before Apple saw a cyclical level peak. And I also mentioned that after this peak was in, that we were going to see a 38.2% to 50% retracement of Apple shortly after. Now, at the time, it sounded crazy to predict that Apple might drop below $100, and most people didn't believe that we were going to run to $150 or even fall to $100 afterwards. If you look at either of these predictions now, it's pretty clear that neither of them are actually that crazy. My mouse is hovering right around the time I posted this video, around $116 on the price around November 27th last year. And shortly after I posted the video, we actually did start heading upwards towards my $148 target. Now, we missed it by about $3 in here. We got to around $145, but it was pretty good. At the time, I mentioned that my position was $130 options calls on Apple, and if you took this trade or any similar one with me, then you made multiple 100% gains on the trade as well. Now, like I said earlier, I believe that Apple actually has a cyclical level top in and that will have a massive pullback. Of course, now that doesn't seem as crazy anymore because we've already had a huge pullback from our $145 high down to about $117 where we recently saw. In this video, I'm going to walk you through exactly where I think price is headed with as much technical analysis support as possible to back up my point. I'll use multiple different tools and techniques and try to find as much confluence as possible between them. Now, if you've seen any of my previous videos in the past, you know that I like to start with a clean chart typically. It avoids bias in my charting, and it allows me to exactly explain why I've done certain things, why I draw what I draw, and why I have certain indicators or trend lines or anything else on my chart. However, because I did a video on Apple just a few months ago, and the prediction went extremely well, and as a matter of fact, I actually haven't moved anything off of my chart since that Apple video. So as a result of all of this, I'm actually going to just leave my chart how I had it in the previous video. If you haven't yet seen it, I would highly recommend you do go check that out. Of course, it's not going to help you with any trades, and at this point, it's all just hindsight, but I do think it's an awesome learning opportunity to see a video in the past predict almost perfectly what happens in the future. At the time of recording, I thought Apple was one of the best possible setups that I had seen in a very long time. And the chart ended up playing out to just technical analysis perfection, exactly how we would have wanted it to. But anyways, let's go ahead and move forward with this video from here. The first thing I'm going to do on this chart is just add more support and resistance lines. Now currently I have them drawn as these pink lines right here, and I have a couple of them drawn at this $145 peak that we had at this fifth wave high up here, this $117 level, which at the time of recording was the price that we needed to break out of to start our uptrend. And you can see that definitely did happen just a couple days afterwards before our huge run upwards. And then the last one that I had previously drawn was this price level around $57 right here, which coincided with the highs through this area of September 2018 and the lows that were caught with this right through here. So when I'm drawing these support and resistance lines on my chart, I'm looking for areas where price has either tested on the upside or the downside multiple times and stopped at that level. Essentially, we can expect that when price comes back down to these same levels that have been hard to break through to the upside or have been used as good support on the downside, we can expect the same exact thing to happen once again. So let's draw some of these into our chart. One of the very first ones that I see that's very clear to me is up here at this wave 1 high. So all I'm doing is hovering my mouse at certain points in here and looking to the right and seeing if these levels have been significant in the past as well. And I can see that this one is. So on our run up in 2019 into 2020 here, we rejected this level right into here actually twice before heading down all the way back down below $52 in here on Apple. And when we finally came back up to it again, price stalled in this area once more, and when we did end up breaking through, you can actually see that the price came back down right afterwards and used this same level as support before our uptrend started. This is extremely common with support and resistance lines and any sort of technical analysis to see a breakout and a retest of those support and resistance lines. Now, essentially with these lines that I'm going to draw, What we're expecting is that if price does come down to this $82 level, for example, and I'm not saying it will right now, we're going to need to look more into the rest of the chart and do more technical analysis. But if we were to come down to this $82 level, I can say with almost certainty and extremely high probability that we're going to bounce off of this level. Now, we might only get a $10 bounce or so before we go back down and break below $82, or maybe we'll use this $82 level as support forever and we'll never see prices below it again. In hindsight here, it's hard to know which one of those is actually going to happen. However, these are extremely important to have on your chart, and I would definitely recommend you start using them and practicing them because they are the basics to technical analysis. So let's draw a few more of these into my chart. The next one up from this $82 level is one I see right about through here, and it's right around $100. So price clearly rejected this level about 3 times into here with a pullback below $90 into here before we finally broke through it. But also these round numbers like $100 are going to be psychological support and resistance lines as well. Any of these round numbers are very common spots for people to either enter or exit trades and take profit or stop loss at. So anything like 100, 110, 120, or even 150 are going to be natural support and resistance lines in the market. And now actually looking back, I see one support and resistance line through these 2 points in the middle of them right here, and it's right into here, where price rejected $89-ish on the way up before pullback almost $7 or $8 downwards, rejected it again through there, and again, we finally broke through, used it as a retest through here, broke above once again, and retested this same level once again. So it was used as resistance multiple times and then support multiple times as well. Now, aside from these levels, there's a ton of different support and resistance levels throughout this 4-wave triangle that we have in here, because price essentially went sideways between this $103 range to $125 range from the beginning of September all the way through the beginning of December in here. So I'll draw in some of these lines that I can see as well. I see one definitely right in there on $112, and I see another one just a little bit lower in here around $110. And I think that's pretty good. I think this helps us define all the support and resistance lines that as we're coming down in the chart, we can expect some sort of bounce off of each of these lines, either temporarily or permanently, before we go back upwards again. So the very next thing I'm going to do on this chart is dive into some Elliott Wave Theory and Fibonacci Retracements. Now, if you don't know anything about either of these, I'm going to give you a quick 30-second summary of each of them. To start off, Elliott Wave Theory essentially states that the market trends upwards in waves of 5, just like I have this 1, 2, 3, 4, 5 labeled, and then corrects downwards in waves of 3, something like this, with an A, B, C. Now, each of these waves are made up of other waves, and you can actually see that inside of this 4-wave triangle right here, that we have this A, B, C, D, E counted inside of it. And now for Fibonacci Retracements, this is essentially a tool where you click twice on your chart, so at the bottom and at the top up here, and each of these decimal values can actually be converted to percentages by kind of sliding the decimal place 2 to the right. So 0.236 is actually just 23.6%, and for example 0.5 is just 50%. So this just tells you the amount that you pull back relative to the distance that you pulled. So if price looks something like this, and we head upwards like this, and then we head downwards like this second yellow arrow would be a 50% pullback, or half the distance of the first yellow pulled backwards in the market. If you want to learn more about either of those two things, I do have videos and playlists specifically going over them. I'd highly recommend you watch those. For now, let's combine the two of those. When we have a 5-wave move in Elliott Wave Theory, like I'm proposing that we have here, it's extremely common for us to put in that ABC retracement back to a 50% retracement of the full 1, 2, 3, 4, 5 move. So in order to measure that, let's use our Fibonacci Retracement tool. We'll click at the bottom of our 1 wave, which I have down here. This is the start of the 1, and this is the end of the 1 up here. And then we'll click at the end of the 5th wave up here. And you can see I'm lining it up and just pulling my mouse sideways just so I can cover more of my chart with this Fib retracement. So just keeping things simple and using this Fibonacci retracement alone, we would have a target on Apple around this 0.5 line. Now I told you that waves are made up of other waves. When a 5-wave move is completed like this, it actually makes up a 1 wave on a larger degree. And then we come back down for the 2 wave and go much higher for the 3, 4, and 5. Now the most common zone for a 2 wave, like this green 2 wave right in here, and you can also see that this yellow ABC is what makes up the 2 wave, just like this ABCDE makes up the blue 4 wave into here, the yellow ABC makes up our 2 wave. Now the most common zone for a 2 wave is actually between this red 0.5 or 50% retracement down to this golden zone right here, this 61.8 to 65% retracement. However, it's not extremely uncommon for us to come to this 38.2% retracement in here. So if we just draw a couple boxes in here that match up with both these retracement values and the previous support and resistance lines that we have drawn, these are kind of the 2 price targets that I would immediately have for Apple. And it's why I was predicting a sub 100 price on Apple in my previous video as well. Because even this top box right here at its highest point is around $103, but more likely we'd actually come down to that $100 support and resistance that we originally established before bouncing upwards. And in a more common situation, we'd actually come down to this second box right here, at least to the 0.5, which would be around $90, but maybe bounce off of one of these other previous support and resistance lines at 89, 82, or even all the way down to this golden zone around $75 or so. So just keeping things simple, that's where I would have my 2 price targets for Apple. However, we can actually dive into our current price action and see if this ABC is actually forming and what would make sense with it. So as we start to dive into the subwaves of the subwaves of the subwaves, aka the ABC that's inside of our 2, the A wave itself has waves inside of it as well, because Elliott Wave Theory, as I said, there are waves within waves within waves. Most commonly, when you're forming the A wave of a 2 wave, like we are, the A wave itself is going to have 5 waves inside of it too. So it'll count something like this, 1, 2, 3, 4, 5 to finish the A wave. And of course, this degree is actually smaller because it's inside of our yellow A wave there. So let's change the color to distinguish it, and then let's change the degree to be much smaller in here. And this is the very first thing that I'd be looking for completion on. We would need this 5-wave structure inside of this A wave just to complete the A wave of our ABC, as you can remember, that heads down to finish our 2 wave on the larger degree. So if we just zoom out a little, we'd have this 5-wave structure as our A. We'd actually then have a 3-wave structure in our B that looks something like this. And we'd have yet another, one more 5-wave structure in our C that looks something like this. Of course, these are roughly sketched right now. Let's see if we can predict them just a little bit better. So diving back into that A wave, we need to get 5 waves out of this A wave right here. Now the price action definitely gets a bit choppy into here. However, once you practice Elliott Wave Theory enough, one of the key things I can see in this chart is that from this low right here up to this high right here, there's a very clear small ABC inside of it. And if you don't know Elliott Wave Theory, this is going to start getting extremely complicated because I'm counting waves within waves within waves, and it definitely can be hard to follow. This small ABC structure is either the 2-wave or the 4-wave of our 5-wave structure. We know this because only 2s and 4s can be made up of ABCs, and we know it's not the bottom of our bigger yellow ABC because we went downwards again right after it. So if our yellow A was in here, and this was going to be our yellow B, this would be pretty short in time before another huge push downwards. More likely, we're just inside of our larger A wave here. So one of the immediate counts that jumps to me is that we have a 1-2 in our first push downwards here, a retrace. This could be our 3 into here. This could be our 4, and then we've actually put in the 5 here for our yellow A. That would essentially mean that our yellow A is in, and if we zoom out, we would then need to adjust this, and I'll just delete the current one we have, to say that our B wave is coming up now, and our B wave would look something like a 3-wave structure like this, and maybe that's already started with our price action, and finally a C wave would follow that as another 5-wave structure, something like this. Again, this is a rough sketch, we'll get more into it, I just want to show you my thought process. So there are a couple things we can do to actually validate if this 5-wave structure is correct. The first one I'm going to do is just a fib pull from the top to the bottom of our 1 in here to the 2, And I remember I told you earlier, the 2 most often comes between this red and this golden line right here. And you can see price definitely falls in between that. So our 2 is really solid through here. To measure our third wave, I'm actually going to use this trend-based fib extension tool, which measures the relative length of moves relative to each other. So let me show you that in action. I'm going to click at the top of our 1 wave up here and the bottom of our 1 wave. And now I've captured the length of our 1 wave, and I'm going to put it at the top of the 2 here, which is the start of the 3, and pull sideways. This pink 1.0 line on this tool would essentially mean that the 1 and the 3 are equal in value if we were to stop at this pink line. Now the most common spot for a 3 to fall is actually in this zone right down here, around 1.618 to 1.75. This is the ideal spot for a third wave. So it's possible that it's in right through here. However, it's also possible that we're still working on this third wave right now. Let's move forward for now and check the other waves. I'm going to use another fib retracement pull for our 4 wave in here. And for a 4 wave, it's actually more common to fall between the blue 38 and the red 50. That's the common zone for a 4. So we pull from the top of our 3 to the bottom of our 3, measure the 4, and we come just a hair past the 50. This is a pretty solid spot for a 4 wave. Now lastly, to measure the 5th wave and validate that, there are a couple things we can do. The first one I'll do is start off with a parallel channel. So you just want to channel from the top of the 2 here to the top of the 4, draw that sideways, and then put it at the bottom of the 3. Oftentimes the 5 will come to the bottom of this channel here, where the 2 and the 4 are pulled, and then meet the 3 on the bottom. 5 could come down to the bottom down here. You can see that's a little bit short. Let's see if we can validate it in some other way. The other thing we can do is a trend-based fib extension pull. We can measure the length of our 1, and oftentimes the length of the 1 and the length of the 5 are equal in value. So we'll put this at the top of the 5, and we'll be looking for this 1.0 on this 5th wave right here. And you can see, once again, we're short of this target. So far, it's having me believe that maybe the 5th wave isn't quite in. Maybe we'll head a little bit further down right here. So if we have just the parallel channel and that fib extension pull of the length of our 1 on our chart, once again, there isn't really a great spot where both of these would match up. We would have preferred the price to come into this zone right here, where we have confluence of both of those things perfectly in this zone right here. However, at this point, I think the best bet is actually that we come down to the median line of this channel at this 1.0 for our 5th wave. So somewhere in here, maybe we'll find a bottom for our 5th wave around $114. Now, yes, it's possible that the 5th wave is already in. However, this would just be a little bit better. So let's predict the rest of the price action off of the fact that we're going to come down to around this $113 level, and you can see that we even have this pink line at 112. So we'll pull this box just a little bit so we can have that sort of confluence with both of those points. And this is the price area I'd be looking for Apple to bottom in, at least in the short term. After that, we need to predict where the B wave will go. The B wave in a zigzag, which is when you start with this 5-wave structure of an A, is most likely to come in this 38 to 50 range inside of here. So we'll draw a box into there, and we'll look for price action that looks something like this. A 3-wave move that gets us right into that box into there. And now finally, once we have this in, we have this 5-wave move down. If it completes into here, a 3-wave move up. And at this point, it's pretty hypothetical because we don't know exactly where we'll bottom. We don't know exactly where we'll top. For now, I'll just say we'll fall somewhere in the middle of this box. The common ratio for the A wave to the C wave, which again we'll use our trend-based fib extension tool, is 1:1. So let's just assume that the A wave falls somewhere in the middle of this box, the B wave falls somewhere in the middle of this box, and we'll pull this sideways. And we'll clean up the chart a little bit to make it easier to read. We'd be expecting our A to C move to come to either this 1.0 pink line right here or this green 1.272. These are both extremely common ratios of the A to C wave. And you can see that this lower one actually lines up really nicely with our box in here once again. I think we could even tighten this box down here and look for a prediction somewhere into this zone right here. Between $86 and $89 would be my best guess price prediction for where Apple is headed given our current price action. So if we get this completed 5 move to here, we get this 3-wave move up into here, I would definitely be looking for yet another 5-wave move, maybe something that looks something like this, to finish on Apple all the way down around $89 as my price target. I'll zoom out just to show you exactly what this looks like. This would be the bottom of our C, which finishes our 2 wave in here. And then our 3, 4, 5 would actually be much higher. Just to give you a general sense, as we did earlier with our 3rd wave, we'll just pull a Fibonacci extension for our theoretical green 1 wave right here, measure the length of it, and then measure relative to the length of our potential 3rd wave. Again, all of these price targets are somewhat theoretical and a guess, so predicting exactly where this 3rd wave is going to fall is going to be pretty tough because we have so many assumptions and guesses at this point. But like I told you earlier, the 3rd wave is most likely to come between 1.618 and 1.75, so that's exactly where I'd be predicting this 3rd wave to fall. In other words, if Apple completes this series of price action that I have labeled here, where we come down to about 112, back up to about 125 to 130, and then finally down to about $90, I would expect Apple to then have one of the greatest bull runs we've seen on this Apple chart, up towards that $270 price target. And then of course, after this 3, we'd have some sort of 4 pullback and a 5 that went even higher, but we'll leave those out of our estimates just for now. So there you have it. That's my Apple price prediction. In the short term, I'm slightly bearish for just a little bit more downside. I'd be looking for some sort of bullish pullback after that before a massive bearish pullback down to about $90 on Apple. I know that sounds crazy, but it sounded crazy thinking Apple was going to run to 150 when we were at 116, and it sounded even crazier thinking that we would even come down to $100 once we were up at that $145 price targets. Try to keep your emotions out of your charting and just read what the chart and price action is telling you. For me, this is my best guess going forward, and I'll stand with this prediction. So if you made it this far in the video, you probably like my content and you'd like to see stuff similar, do me a favor and click that like button below and hit subscribe for future similar content. I really appreciate all of your support. And lastly, if you want to trade stocks, options, crypto, or anything else with me, I have a link to my Discord in the description below. Feel free to click it and come check it out and trade with us. There are hundreds of people trading every single day with weekly training sessions, and I promise you don't want to miss it. So with all that being said, thank you so much for watching, and as always,